Good afternoon, everyone. We welcome you all to NITYA DAX Associates webinar on Sabka Vishwas Legacy Dispute Resolution Scheme 2019. We are really thankful to everyone for joining us in such large numbers and attending this session. We'll be beginning this session by discussing the background and the enactments that are covered under this scheme. We'll be moving on to the eligibility and tax reliefs that are there under this scheme. We'll also illustrating the cases that will be covered under this scheme for better understanding of all our attendees. We'll be thereafter moving on to the restrictions that are there under the scheme, the procedures that are required to be followed, and we'll thereafter be ending this session with a Q&A by all the attendees. Moving on to the background. The central government introduced the Sabka Vishwas Legacy Dispute Resolution Scheme 2019 with a view to put an end to the ongoing litigation and liquidate almost 3.75 lakh crores that is stuck in all these litigations. To operationalize this scheme, the government introduced the Sabka Vishwas Legacy Dispute Resolution Scheme Rules 2019, which discussed the underlying procedures and compliances that every taxpayer is required to undertake under the scheme. It is very important to note that this scheme is operational only till December 31, 2019, thus time is of great essence in this. This scheme covers cases which are pending under Central Excise, service tax and other indirect tax enactments. It is very important to note that the scheme does not cover cases which are pending under Customs and Schedule 4 of the Central Excise Act. This is precisely because these levies are still existing and have not been abolished. It is important to note that this scheme is very different from other amnesty schemes that have come till date. This scheme not only provides complete exemption from any kind of penalty or interest, but it also provides significant amount of relief in terms of the tax amount. The government under this scheme has issued multiple circulars and FAQs. This is precisely the reason that this webinar has been conducted. Our webinar not only covers these the circulars that have been issued by the government, not only provide various clarifications that have been issued under the scheme, it also expands the overall scope of the scheme. Our webinar will discuss the scope of the scheme that have been extended by the government by the issue of these circulars and FAQs. Now I hand over the session to Puneet, who will be discussing the eligibility and tax relief that is there under the scheme.
Thank you, Anshika, for introducing the webinar, and good afternoon, everyone. The scheme is picking up. As per the news sources, the government has already collected more than 5,000 crores in the scheme, and gradually more and more taxpayers are opting for the scheme. In our subsequent slides, you will notice that the government is going out of the way. So even certain things are not clearly coming from the legislation, but still they are expanding the scope of the scheme. Couple of illustrations, like the disputes relating to Senvat credit, they are not specifically covered under the scheme, but government has clarified it through a circular. Secondly, the appeals filed on or after 1st July 2019. These are not clearly covered under the scheme, but government has given a way out to file application in such cases as well. So with this background, we are hosting this webinar, and we conducted another webinar on the same topic almost 1.5 months back, because at that time it was new, but we felt that considering so many circulars and clarifications being issued by the government, it is useful that we run past you through the latest on the scheme, and based on that you can take a considered decision whether to go for the scheme or not. So the most important aspect of the scheme with regard to eligibility and tax relief. So as far as scheme is concerned, it puts the applications into 4 categories, starting from voluntary disclosure to pending show cause notices and appeals to cases during audits, inquiries, and investigations, and lastly the arrears. So we'll be discussing all the 4 categories in detail. And as of now, based on the law and based on the clarifications issued till now, what is the eligibility and benefit you can expect from the scheme? Moving further, the first category is audit, inquiry, or investigation. So, to be covered under this category, there are 2 conditions which need to be cumulatively satisfied. Firstly, you must have an audit, inquiry, or investigation going against you. The most important part is it should be pending. And secondly, the duty payable is quantified on or before 30th June 2019. Therefore, only in a situation where you have a pending audit, etc., and prior to 30th June 2019, the government has issued a letter to you quantifying the duty amount, you can file an application under this category. Now, the pertinent definitions under the law are for audit. The government defines audit as scrutiny, verification, and check commenced by a written intimation by revenue, which normally happens in all audits. Inquiry or investigation have been defined in the widest of the manner. It includes search, issuance of summons, recording of statements, production of documents. And lastly, we have quantified, which is a written communication of amount of duty payable. A very important clarification which has been issued recently is that till the time a show cause notice is issued, audit will be considered to be pending. So prior to this clarification, there was a lot of ambiguity as to when an audit will be considered to be pending, because generally the steps in the audit are that firstly the department issues a letter to you stating that these are the documents they need. Then once you provide the documents, the authorities visit your premises, they check the records, etc. Then there's a exchange of letter correspondence between you with regard to the audit objections. So irrespective whatever stage is there, before issuance of show cause notice, it will be considered that audit is pending. But yes, very importantly, there needs to be a quantified demand to fall under this category. So if the tax dues are 50 lakhs or less, then the amount of tax relief is 70%. But if the tax dues exceed 50 lakhs, then the relief is 50% only. Now, mathematically, the formula is, so whatever the tax dues minus tax relief, that is the amount which is payable by you. And if during the course of audit or investigations, any amount you have paid, that will be adjusted. An important aspect to note is that a number of times it may happen that when the audit authorities issue a letter to you stating that this demand is payable, there may be arithmetical errors also. So say for example, before 30th June 2019, they issued a letter to you stating that 100 rupees is the tax payable, but when you check your records, the tax payable works out to 80 rupees. So in that case, the tax due will be considered to be 80 rupees only. So whatever is mathematically correct figure of the tax amount, that will be considered under this category. The second and most important category because of which this scheme was introduced is for the pending show cause notices and appeals. Again, there are 2 conditions. Firstly, a person should either be in receipt of show cause notice or he should have a pending appeal. Either it can be his appeal or revenue appeal. So there should be a pending show cause notice or appeal as on 30th June 2019. The government defines appellate forum starting from Commissioner Appeals to Appellate Tribunal to High Court and Supreme Court. And the second condition is that the final hearing should not take place before 30th June 2019. So in the subsequent slides, we'll be discussing as to how the government has expanded the scope of the scheme even to cover litigations beyond what is appearing in slide before you. But as of now, yes, you're having a pending show cause notice or appeal, and no final hearing has taken place before 30th June 2019, you become eligible. But one pertinent question will come up is that, say for example, in your case, the matter was before High Court and it was concluded before 30th June 2019, and the judge retired without passing order. Or number of times it happens that the adjudicating or appellate authorities change. So in those cases, it will be considered that final hearing has not taken place. So only if the judge or the authority before which the hearing took place, he or she still holds the office, then only it will be considered that final hearing is pending. Otherwise, you can take benefit of this category. Again, in this case also, if it is less than 50 lakhs, the relief is 70%, and if it is more than 50 lakhs, the relief is 50%. The formula continues to remain the same. Third category is another interesting category where the government is trying to rope in things indirectly through circulars, etc. So third category relates to arrears. So arrears basically mean whatever an amount you owe to the government. So in arrears, the government has put various baskets. First basket is a very clear basket that admitted tax liability in return filed on or before 30th June 2019 but not paid. So this will be a typical situation where you have filed a return indicating the tax amount, but you have not paid the tax. So your return itself shows an unpaid tax liability. The second case is in a situation where you have not filed an appeal. So the second situation can have various variants. So it can cover situations, orders passed before 30th June 2019 or after 30th June 2019. It can cover cases where you have limitation period available for filing an appeal or you don't have the limitation period available. So as long as you have not appealed against an order, even if the orders have been passed after 30th June 2019, whether limitation has expired or not, all those cases will be covered under the arrears category. So even though it is questionable whether legally the government could have done through this circular or not, yes, but in the interest of widening the scope of the scheme to enable more and more taxpayers to file for the scheme, they have expanded this category. So second category is where order has been passed but appeal has not been filed. In this case, if the limitation period for filing an appeal has not expired, you need to file an undertaking that you will not be filing an appeal against this. Third category is where the appeals have been filed after 30th June 2019. Again, here the orders can be passed before or after 30th June 2019. Here, even though you have filed an appeal, but you need to file a declaration before the appellate authority or the tribunal that you intend to withdraw the appeal. So the third category is appeals filed after 30th June 2019, where you are declaring to the concerned tribunal, courts, or the authorities that you intend to withdraw the appeal. So importantly, the arrears category is covering all sorts of orders which have been appealed or not appealed. So if you have not appealed, you need to give an undertaking that you will not file an appeal. If you have filed an appeal, then you need to file a declaration that you intend to withdraw the appeal. So few illustrations to bring home the point. A taxpayer has an order issued where time period has not lapsed and he has not filed an appeal whether he is eligible. Earlier he was not eligible, but now through the circulars, the government has made the taxpayer eligible. The second situation is that the order was received before 30th June 2019, but appeal was filed after 30th June 2019. Is taxpayer eligible? Again, taxpayer was not eligible earlier, but now he is eligible. So in the first case, he needs to file an undertaking that he will not be filing an appeal against that. And in the second case, he'll file a declaration for withdrawal of the appeal. So tax relief, the government has reduced tax relief by 10% in these cases. So if the tax dues are less than 50 lakhs, the relief is of 60%. If it is more than 50 lakhs, then it is reduced to 40%. So the amount payable is tax dues minus tax relief. One important aspect to understand is that if this is a case of the taxes disclosed in the return or tax dues arising out of orders, etc., how the amount payable will be computed. So we have put an illustration. So even though the law provides that amount payable is equal to tax dues minus tax relief, and we are falling under the category of arrears, so we need to see what was due. Arrear means what was taxpayers due to the government. So if the tax amount was 100 and he had already deposited say 60 rupees during the investigations, and it is a case of an order where he is not filing an appeal or he is withdrawing the appeal, so the tax due is 40 rupees. So as on date of filing the application, he owed 40 rupees to the government. In this case, let's presume that he falls under the category of 60% relief. So he needs to pay 16 rupees to the government. So the point we want to bring home here is that as far as the arrears are concerned, you only need to see what is the amount which is payable as on the date of the filing of application. You need to apply the prescribed percentage to that. Whatever you have deposited earlier, that will not be reckoned at all. So there are few things we need to keep in mind in the arrears category. And these things are coming more from the government's FAQs and circulars. So one issue which they have clarified is that if there are tax dues or if there are arrears arising out of many returns, then whether a taxpayer need to file a separate application for each return. So the government has clarified that for administrative convenience, the taxpayer can file a single application even for the multiple returns, even though the assessment and the computation, etc., has to be done return-wise. Lastly, the voluntary disclosure category. So voluntary disclosure, as the name suggests, that any taxpayer who wishes to make a voluntary disclosure of tax payable. So there is no investigation, there is no audit, there is no arrear, there is no show cause notice or appeal, but the taxpayer himself realizes that yes, he owes certain money to the government. In this case, the condition is that he should not have been subjected to an audit, investigation, and inquiry. And under voluntary disclosure, if there is an amount indicated in return but not paid, even that will not fall under voluntary disclosure category. So the amount stated in return, that will fall under the arrears category only. So as far as scope of audit, inquiry, investigation, that we discussed in detail, that till a show cause notice is issued, audit, inquiry, or investigation is continued to be pending. Importantly, one of the conditions the government has put is that If the voluntary disclosure is found to be false within a period of 1 year, then the proceedings will reinstitute. So importantly, this sort of restriction is only there for the voluntary disclosure category, that if the declaration is found to be false, the proceedings will reinitiate. This sort of restriction is not there in other categories of applying for dispute resolution. In this case, there is no tax relief as far as tax amount is concerned, so 100% amount is payable. But yes, as far as interest and penalty is concerned, 100% relief is granted. So effectively, in this case, you need to deposit entire amount which you are disclosing to the government. With this, I hand over the session to Dharnendra, so he will take us to the restrictions, procedures, and the way forward, which we suggest to all of you opting for the scheme.
Thank you, Puneet. So, Puneet succinctly took you through the scheme, the eligibility criteria, what are the various options that are available, what conditions you need to fulfill, and what are the tax relief under the same, those categories. Now we will cover certain aspects. So there are certain restrictions which the scheme has imposed, and we'll take you through the same. First is that if a person has been convicted of an offense for a matter for which he wants to avail benefit under the scheme, then there is a restriction. So for the same matter, you cannot approach under the scheme. Second is that in cases which involve refund application or refunds, you cannot approach under the scheme because the same are outside the purview. You do not get any relief there. Third one is that if your application is pending before the settlement commission, then again you cannot approach for the benefit under the scheme. And here there is a some clarification which has come out, which clarifies that cases which are no longer pending under before the settlement commission, the same would be covered. So in the sense, if the settlement commission dismisses any petition, it does not admit any claim, and the matter goes back to the adjudicating authority, then it becomes at the stage of show cause notice, adjudication, etc. Likewise, if there is an amount which the settlement commission finalized, and that amount is not paid and the taxpayer has shown that as arrears, then it will be in the category of arrears. So these are the conditions under which, even if the application was filed but is not pending as on date, then those cases will be considered under the scheme, not otherwise. Next is that the scheme very clearly provides that you cannot pay the amount prescribed under the scheme, which is identified and which the taxpayer agrees to pay through utilizing its input tax credit or SENVAT credit. So there, this restriction, that amount needs to be paid in cash only. Next is that whatever amount you have paid under this scheme, you are not eligible, or your customer is not eligible to avail input tax credit of the same. So you cannot issue a supplementary invoice to your customer, or you cannot claim that you had any input tax credit available through which you will utilize it and pay it off your output liability. So you cannot, neither you can utilize your input tax credit, nor your customer or your recipient of your supplies is eligible for the input tax credit. And lastly, even if you end up paying some excess amount under this scheme, the same would not be refundable. For example, the scheme, as Puneet pointed out, contemplates different tax reliefs, which range from as high as 70% to 0% in case of voluntary disclosure. Now, supposing in case where the relief is 70% and you, before approaching for the scheme, you have already paid, say, 50% amount. Now you were eligible for 70% relief, and but since you have paid 50% of the tax amount, you cannot claim refund of the 20% which you have excess paid. So no refund will be eligible, or Later also, if you realize that there is some excess amount paid under the scheme by you by mistake or inadvertently, the scheme does not provide for any refund mechanism and clearly mentions that excess deposit will not be refundable. So we come to the procedure side, how to apply, what precautions to be taken, and how the overall it's the entire scheme or the procedure is online through the government GST port, through the portal of CBIC, and so you go to cbic.gst.gov.in, that's the portal. There you go to the scheme login. There is a Sabka Vishwas legacy dispute resolution scheme login. There is a particular icon where you click and then you create your login. If you already have the username password, then you can log in through that ID, or you can create also new IDs, especially in case of voluntary disclosure where people are not registered. Usually in most of the cases they need to create a new ID. There you fill a form. There is a form, very simple form, where you put in your information, which requires what kind of assessee you are, whether you are a manufacturer, you are a service provider, whether the duty or the tax is of excise duty or service tax, and information like that you have to put in, and then you move on. So you declare your basic information, amount of duty that is involved in your case, and what category you fall under different categories which Puneet mentioned. You have to specify the category also. Period of dispute needs to be specified there. And based on the duty demand that you mention, the scheme and the category that you mentioned, the scheme or this form automatically calculates the amount that is payable by you based on the different tax relief percentages that Puneet discussed. After you have done this, the government verifies or scrutinizes the form, and they have 60 days time to issue what is called Form 3, SVLDRS Form 3, which specifies, which directs the taxpayer to make the payment in terms of the scheme after computing all the relief, etc., within 30 days of issuance of the form. Now, this form is also online. There is no hard copy or anything that is received. So the taxpayers who opt for the scheme need to be mindful of this fact, and they need to regularly check their portal. And this also directs, in case your appeal is pending before High Court or Supreme Court, this Form 3 also directs you to withdraw the same and upload the withdrawal certificate. And this exercise is to be done by the taxpayer or whose appeal is pending before High Court or Supreme Court. So this Form 3 is not generated in cases where the tax amount payable is nil. Only where tax amount is payable, if you have already paid 100% and there is no tax that is due to be paid under the scheme, then this form does not get generated in your case. Moving on, once you receive this Form 3, you are liable to pay this amount within 30 days and also give proof of withdrawal of appeal, especially when they are pending before High Court and Supreme Court. So you make the payment within 30 days, and for forum other than High Court, Supreme Court, there is a deemed withdrawal of appeal. But for High Court, Supreme Court, you have to apply, you have to seek withdrawal of your appeal, and based on that, whatever the orders are passed, you upload those orders on the portal. So this proof needs to be uploaded. Now, last but not the least, once your payment and appeal withdrawal certificate, etc., are uploaded, the government then checks it. That there is a designated committee which is formed, which will check, and they will issue what is called the discharge certificate in form SVL-DRS 4. Now, this discharge certificate clearly stipulates that the declarant who applied under the scheme has paid the demand amount, tax amount, and he has discharged all the liabilities under the whatever in the declaration that has been filed, and based on that your case is settled and that litigation is over. Now there can be situations where you do not agree with the amount which the portal displays, when you show certain amount of demand and there is a calculation as per the scheme, but the taxpayer may not be in agreement with that, or whatever certificate is issued in by the taxpayer, by the revenue authorities asking the taxpayer to pay, taxpayer may not be in agreement with those demand amount. So we have considered this situation also. Again, the portal is same, cbic.gst.gov.in. You again fill the same form, but you show your disagreement here on the computation part, amount that is payable under the scheme. When you show your disagreement, what you receive what is called form SVL-DRS2 from the revenue authorities, wherein they ask you to give your explanation and they also afford you an opportunity of personal hearing. So, and there is one adjournment also possible in this case. What you fill is Form 2A. In this Form 2A, you give, you can request for adjournment, and you also upload your written submissions, your reasons why you do not agree with the computation in form as per the portal. Based on this, the authorities will then issue SVL-DRS2B. Now, this form will specify or quantify the exact amount. This form is for the grant of adjournment, one adjournment which is allowed. And after you have been heard and after considering your objections, submissions, etc., government issues form SVL-DRS3, wherein they quantify the amount that is payable by you within 30 days. This is the statement that the designated committee will issue. Again, as we discussed in the case of agreement, you pay the amount within 30 days and you withdraw your appeal, etc. And then the discharge certificate is issued by the designated committee, specifying that yes, the matter is closed. So what are the consequences? We move on to consequences that you have applied under the scheme, your application has been considered and your matter has been settled, and you are now holding a discharge certificate issued by the designated committee. So what are the consequences ensuing such discharge certificate? The first and foremost, you, for the same matter and period, you are not liable to pay any further amount. All proceedings will drop against you, and you are not liable to pay any amount for the same period on the same matter. Next, no subsequent proceeding for the same matter and period. Now, because your matter has already settled, the department cannot reopen it for the same period and matter. Of course, department is free to issue show cause notice for a different matter pertaining to the same period, because that matter was not settled. It's a different matter altogether. Also, department for the same issue, same matter, department can issue show cause notice for the subsequent period. So, supposing for you have on the identical issue 4 show cause notices, and you apply under the scheme for 1 show cause notice for a particular period, obviously the remaining 3 show cause notices will continue. They are live, and those proceedings will continue against you. Likewise, department is not precluded even there is a subsequent period for which show cause has not been issued, but that show cause notice is within limitation and department can issue a show cause notice for subsequent period. Then department is not barred from issuing show cause notice for subsequent period. And of course, if the matter itself was not agitated or taken up in the scheme and the matter is open, then of course the department is free. So you have certain benefits, and yet there is no bar for different periods and different matters. Some of the important issues that we identified, especially after the new circulars and clarifications that came, and we thought that would be important, and these are also based on our experience with the different industry people who applied under the scheme and who came across these issues. So we thought that we'll take them up one by one. So first and foremost is whether the taxpayers typically ask whether they can avail or they can utilize their SENVAT credit, whether they can claim come tax benefit under a show cause notice or appeal or wherever, whatever tax demand is, and whether if the show cause notice has or the order has a wrong computation or quantification of tax, whether such disputes can be taken up before the designated committee, and whether designated committee can address these issues and can reduce their tax demand to the extent, or they can avail the benefit of SENVAT, come tax, etc. The answer is clear: no, the scheme does not provide for any such benefit. Taxpayer cannot avail benefit of SENVAT, come tax, or wrong quantification, because the authorities, designated committee under the scheme cannot change the definition of tax dues and tax relief. It is very categorically and in a very pigeonhole approach they have been put that yes, this is the tax due and they cannot look around. And likewise for tax relief, they cannot look around. Moving ahead, another point that that has come up, and while the scheme does not put any specific restriction, is that whether a co-noticee can opt under the scheme. So typically you would see that, you know, in the show cause notice there is a tax demand against the company, and then there are personal penalties, etc., proposed against the directors or some key managerial personnel. In such cases, you know, the key managerial personnel or the directors, they wish, as co-notices, they wish to close their case by availing benefit under the scheme, which provides for 100% waiver in case of penalties and interest and penalties. However, through clarification, the authorities, the government has clarified that unless the principal noticee settles the tax demand case, the co-noticee cannot apply under the scheme. So once the principal noticee has closed the matter, he has settled the matter, yes, co-noticees can apply and settle there and or claim complete waiver from penal proceedings. But till such time the principal noticee has not opted, the co-noticees cannot apply. Next point that we came was whether when the scheme was not in force, and if a taxpayer or a declarant has already discharged the tax liability by utilizing the SENVAT credit or any input tax credit available with him, whether there is any restriction after the scheme has come, he has applied, he has made a declaration under the scheme, whether this is permissible, is there any bar under the scheme for utilizing SENVAT credit for the prior period. The answer is clearly, you know, that there is no such bar under the scheme, and the declarant was absolutely right within his powers to utilize SENVAT credit at the relevant time for discharging his liability. One more issue which came up was that all these schemes, you know, on the face of it, when we read the scheme, it only talks about a person who is in default. And person in default of non-payment of tax is the, you know, either the manufacturer or a service provider, or in few cases could be service recipient if it is a reverse charge liability which is fastened under the Finance Act 1994, section 68 to etc. So in those cases, certain situations which came out, and you know, these representations were made before the CBIC, the board, wherein one of the you know, like retailers association said that for renting of immovable property cases, it were the tenants or the lessees who approached the Supreme Court, and Supreme Court directed them to pay 50% amount, and they undertook to pay the remaining amount in case they lose the matter eventually. So they were not service provider, they were recipient of service, yet they undertook to make the payment. Likewise, there are situations where there are asset reconstruction companies who take over the asset of a borrower, and they are now holding all the asset, and department is pursuing the demand of tax from such asset reconstruction companies. Case in hand is like RICO, the Rajasthan Investment and Industrial Development Corporation, and all such institutes across India. So these institutions and such companies and such other persons, service receivers, etc., whether they can apply under this scheme and they can claim benefit under the scheme. Obviously, the scheme was silent. The scheme did not talk about such persons, but a clarification was issued to this effect by CBIC, wherein such persons were also made eligible to apply under the scheme, avail the benefit, subject to the condition that they also satisfy the various conditions that are prescribed for the normal, as in the case of a normal taxpayer, what conditions are prescribed. The same conditions hold good even for these such other persons and asset reconstruction companies. Okay, so the way forward, we come to the way forward, what do's and don'ts one should follow while going for the scheme. So first and foremost is every company, every taxpayer needs to identify the cases. They need to analyze the cases, pending litigation, inquiry, investigation, etc., or voluntary disclosure, or if it is area, whatever is the case, and analyze whether it is a fit case to apply under the scheme, or they should not apply under the scheme. So that analysis needs to be done, looking into the merits of the case, the time and cost involved, etc., and take a considered decision before applying under the scheme. Second important aspect they need to keep in mind is that in case an adverse order has already been passed, whether before June 30th or after June 30th, the taxpayers are advised to file appeal. And then if the under the scheme they get a benefit, then they can withdraw the appeal, and before they can withdraw the appeal and give a certificate to the authorities, but not to let go their right of appeal, because tomorrow if your benefit under the scheme is not granted, then your appeal will become time barred and you will not be able to go in for appeal. So let's not lose your remedy, and it's better to file an appeal and then withdraw it. And lastly, if a personal hearing is fixed in a matter, whether at the show cause notice, adjudication stage or appeal stage, make an application for keeping the proceedings in abeyance in light of your proposal to opt for the scheme. And if the hearing has taken place, you can still write to the authorities not to pass orders because you are applying under the scheme. So that the burden of filing an appeal and all those things are also taken care of. So these three are the issues, and we'll just take up the questions. We have certain questions. We'll just take them up one by one. So first question is from Indorama, whether the payment can be done in installments under the scheme. The answer is no. The scheme does not contemplate payment in installments, and no clarification has come to this effect. Maybe if some application is made to CBIC and they come out with some clarification, we can't say, but since the time limit prescribed under the scheme for payment is 30 days and that time limit is sacrosanct, it appears that the government is cognizant of this, and they do not want to allow installment payment, because within 30 days you have to pay, and if the amount is not paid, the scheme stipulates very clearly that your matter, your application would lapse. The proceedings under the scheme would lapse, and wherever they were at the earlier stage, say adjudication or appeal, they'll reconstitute there. And in case of voluntary disclosure, the government will be free to raise demand against you. So, given this, in light of these provisions, it seems that government has deliberately not allowed installment payment here. Next is from HUL. They've asked that the CBIC help desk closes without any resolution. In most cases, if the help desk does not provide you a resolution, there is a you could write a mail to them, and what our experience has been that within 24 hours the mail is responded, and they try and resolve. And if we still cannot reach out, if your issue query is not resolved, you could always reach out to us and we can take it further forward from there. Also that the portal shifts to IceGate portal. So the CBIC portal shifts to IceGate portal for payment. And then IceGate portal doesn't show the list of challans. Yes, you are right. So the challans are on the CBIC portal, but when you go to the payment option, they will take you to IceGate, and IceGate only requires you to provide for very limited information. And once you punch in that information, they will take you to the NEFT or RTGS. They will ask you depending on the amount that you are required to deposit, and based on that, you can make the payment, and the challan gets generated. Now, since the IceGate portal itself does not give you details of challan, that those details are available only on CBIC portal. Now, since you have logged into through your CBIC portal, your own account, using your credentials, therefore the challan that the payment that you make on IceGate through IceGate portal, that is in your name only. That is, even if your name doesn't appear in that sense, it is your challan, and you can very well use it to discharge your liability. Next is that CBIC portal, there are errors at times. Yes, it is whenever there is a heavy load on the server, these errors do happen, but it's not all the time. Sometimes they happen. You can always try and log in after some time, and usually it is taken care of. And if it is not happening, if the problem persists, you could always write a mail to the help desk, and then they will take care of. Okay, next one is from Jaiswal Neko, where they've asked that there are 5 different separate memos or objections during departmental audit, but the final audit report is single. And whether in the scheme can you opt to pay, or only for 3 objections? The answer is clear no. The scheme very categorically says that you, even for show cause notice or for any proceedings, you opt in entirety. You can't choose just certain aspects and ignore the others. So you have to either opt in entirety, or you can't, or you don't opt at all. So you will not have the choice, because the final audit report is single, which has 5 issues in it. You will have to take up all the 5 issues before the under this scheme. Last one, somebody has asked what are the other enactments under the scheme. So section 122 of the Finance Act number 2, 2019 gives list of, apart from Central Excise Act, Central Excise Tariff Act and Finance Act 1994, there are some 26 other acts, which include education cess, higher education cess, Krishi Kalyan cess, Swachh Bharat cess, and there are a host of other cesses like agriculture produce, coffee, mica mine, rubber, salt, medicinal toilet preparations. So there are a host of these cesses which are falling under the other enactments under the scheme, for which benefit can be availed. We have also received one more query which says that from Mr. Rajiv Kumar, which says that SCN has been adjudicated before 30th June 2019. Appeal is after 30th June 2019. the CBEC circular says that one may go for the scheme giving undertaking to withdraw the appeal. Please guide whether it has support of statute 2. So, on the face of it, if you read the scheme, obviously the scheme never contemplated situation. It only talked about that your final hearing should not have taken place before 30th June, or no adjudication order has been passed before 30th June. Having said that, through clarification, because the intent of government while coming out with this scheme is to, as Puneet mentioned, that there is, and Anshika also mentioned that 3.75 lakh crore is stuck in the indirect tax litigation under excise and service tax, and government's intent was to encash and do away with the old litigation and also collect as much revenue as possible in shortest possible time. So given that, and they also have in the scheme they have provision which says that government can issue clarifications for enabling the implementation of the scheme and to do away with any remove any difficulties that might come. It seems that under those powers and the intent and the object with which the scheme was launched, the government has issued these circulars and clarifications and FAQs. And the idea, as we have seen, that even while I was discussing about asset reconstruction companies and service recipients applying under the scheme. So idea, it appears that government wants the resolution of pending disputes rather than lingering on the same, and therefore in this situation also, if you withdraw your appeal and you give an undertaking not to file an appeal, which means that the matter comes back to the same stage, the order has attained finality, and it becomes like ARREAR. So ARREAR has one of the condition that the order should have attained finality, or the time period has lapsed, or even if the time period is not lapsed, you undertake not to file an appeal, and therefore to that extent that order has attained finality. In any given situation, it becomes like an area which government can collect from you, and with this, we feel that while there may not be a very direct any specific clause in the scheme which covers your situation, but if we read ARREARS portion very in depth, we do feel that after giving or withdrawing the appeal or giving an undertaking not to file appeal, your case fits there. So to that extent, the circulars are in line with the scheme overall purpose and intent of the scheme. So we have no further questions. We would want to thank everyone for the participation, all the attendees, and if you still have any further questions, feel free to write to us. You have our mail IDs and contact details on your screen. We would be more than happy to support you. Thank you very much. Thank you.
Thank you. Thank you.
Camera.